It's because I'm not talking yet, guys. But we're going to get started. Maybe the first time some of you guys have heard my voice. Huh? Well, despite rumors started by S. Guardian and Cyrus, I am not an AI driven robot. Some of you may know that I'm elderly. In fact, ancient might be a better word to use. And since I started trading early, I've been trading a long time, probably longer than a lot of you guys been on Earth. And during that time, there's a point to my rambling. During that time, I've been a day trader pretty much the whole time, except for the last 6 years. About a little bit over 6 years ago, I became involved with the FJ room. And as it's grown and gotten more and more active, I've just found that day trading is not practical. Day trading, the way I do it, which is scalping, requires an intense amount of concentration. So it's just not practical. So the past little over 6 years, I've switched over to swing trading. In fact, probably 90% of what I do now is swing trading. 90% of my capital is swing trading. Now it's sad in a way, but I have found that I make a lot more money swing trading than I ever made day trading. I say sad because I think back and maybe I could have made a lot more money over those years. But on the other hand, I love day trading. It suits my personality perfectly. And so I'm glad I've done it over the years. Somebody with a microphone, can I be heard okay? Everybody's got their stuff muted. Nobody's got a microphone. Okay. I hope you can hear me okay. And I hope you can see my screen okay. Uh,
Yes, yes, sir. We can hear you, and the screen looks good.
oh, thanks, Eddie.
Yes,
Good to
sir.
see you. Okay, so there's a point to my rambling. Day trading, if you look at it, the way I look at it, there's two types. There's scalping, where you're in and out in a matter of minutes. And then there's what you would more commonly call day trading, where you take a position, you watch it for 30 minutes, an hour or two, maybe the rest of the day, and then you get out before the market closes. You don't hold overnight. Of those two types, I always preferred scalping. I just never could get the hang of holding on to it for a while. So, what I'm going to present to you today is pure scalping. The, uh, the other thing I've found is that when you scalp, there's two ways you can approach that. You can trend trade, where you trend follow, where you identify a trend, jump on board, and ride it. Or you can trade reversals, where you identify a reversal, jump on board, and trade it. I trade reversals. So, what we're going to look at today is scalping reversal trades. So, over the years, I have developed a number of custom indicators that I've used to try to help me identify when there's going to be a reversal or we're in a reversal and I can take a position. Now, I know a lot of you guys don't use indicators. I can tell from following the conversations in the room. I know a lot of you don't believe in indicators. If one of you are here today, maybe I'll change your mind. Um, I like indicators, but the indicators I've developed and make some sense to me. We're going to look at about 5 or 6 different indicators here today. And each of those indicators, I have approached the reversal in a different way mathematically. Okay? So none of the indicators I'm going to show you today overlap each other in any way. So if I see a trade setup and all 4 or 5 or 6 of my indicators are showing me that there's a reversal, a confluence like that means a great deal to me. I would take that trade unless something else was going on. Data was about to be released or something. So that confluence is very, very important. I will take questions if somebody's got a microphone and wants to ask as we go along. Otherwise, we're going to start over here with this. As you can see, I've got 4 panels, 4 windows. I can open them up, make them all bigger if I need to. We're going to start over here on the right. This is a time chart. It's a 5-minute time chart. Something's dropped the market. The ISM? Oh, okay. This is the time chart. Let's show you. Let me tell you what we got up here in this top panel. These are the yellow bands or Bollinger Bands. This little orange line is the 20-period moving average that comes with the Bollinger Bands. This purple line is the VWAP. These are 1 standard deviation above and below the VWAP. And this white line is the midline of all the price actions since the market opened. Now, what do I do with those? Absolutely nothing. Why the hell are they on your chart? Well, the only purpose that they serve to me is orientation. I can look at that top panel rapidly, and from where the Bollinger Bands are and what they're doing, where the VWAP is, where the midline is, I can tell pretty quickly what the market's doing. So it's only there for orientation. I don't use any of those. Let's go to the bottom panel. Here we have volume. This yellow line that's up here is a little hard to see. I should make that a little heavier. This yellow line is a 5-period moving average of the volume. So I can instantly look at that yellow line and tell what the trend of the volume is. I know you can do that without a moving average, but it makes it a lot easier with a moving average. This light blue line is the ATR, the average true range. I do use that in making judgments about trades and following trades. You can see it took off right there, and that's because the market opened. I gotta get rid of these. Can y'all see that? Okay, probably not. Now, this next panel up here is the QQE. This is not one of my indicators. This is an indicator actually that Ibufen, I'm probably damaging his name severely, but he's the one that turned me on to this. This is the quantitative qualitative estimation. It's a neat little indicator. Whenever I get looking at a new indicator, I put it on one of my charts and I just watch it for a while to see if it adds anything to what I'm doing. Now, this indicator does add to my scalping. It shows reversals pretty nicely. It's not, it doesn't show reversals ahead of time. It doesn't predict reversals. But once it's made its turn, you can feel pretty confident that it's going to continue in that direction. This next one up is a custom indicator. I call this my cycle indicator. I'm going to make this chart bigger. Watch your eyes. Yellow kind of gets your attention, doesn't it? Okay, what this is I've taken an oscillator, which, as you know, is an indicator type that swings up and down, cyclic like a sine wave. I've taken an oscillator. In this case, I've taken the double stochastic. In fact, I've taken the double stochastic that Ask Guardian gave me to use for TradeStation. He's such a good guy. I've got 3 data series on here. I've got a 5-minute data series, a 10-minute data series, and a 20-minute data series. And I've applied that double stochastic to each one of them. So the yellow is the 5-minute data series. And it cycles pretty nicely. It's noisy. It's noisy like you would expect an oscillator to be. It's noisy like you would expect a short-term oscillator to be, like a 5-minute. The red is a 10-minute data series. And it's cyclic, like you would hope it would be. And it's not quite as noisy. The blue line is the 20-minute data series. And it's got some noise in it, but in general, it's a little smoother than the others. Okay, why would I have that on my chart? What am I looking for there? What I'm looking for there is a triple top or a triple bottom. When all three of those cycles peak at the same time or bottom at the same time, it's very often that you're going to see a reversal. I was watching this around 2:30 this morning my time. So right here, there's a beautiful triple top. You see that the yellow, excuse me, the yellow's peaking, the red's peaking, the blue's peaking. It's a terrific triple top. And look what candle it showed up on. It showed up on the candle two candles before the drop. So we got an early warning here of a triple top. Triple bottoms can work the same way. Um, as I say, I find this to be pretty useful. Okay, let's go over now to this panel, the left-hand panel. This is a Renko chart. I don't know how many of y'all are familiar with Renko charts or have used them before, so let me just orient you somewhat to the chart. What we're seeing here are no longer called candles, they're called bricks. And each brick has a certain amount of ticks in it. I've got this set so that there's 4 ticks. This is a MES, by the way. There's 4 ticks in each brick. So there's exactly 1 point in each brick. So you could glance and quickly tell how many points that move was just by knowing that there's 1 point per brick. Okay? You'll notice that the Renko bricks are always diagonal to each other. They don't overlap. A brick is closed and formed when the price action has gone that 4 ticks. So once this brick started forming, it went back and forth, back and forth, back and forth until it finally made its 4 ticks, and then it printed the brick and moved over for the next one. I know that's not a very complete um, estimation or explanation of Drinko charts, but not to type too much time, we'll move on. There's 2 things on this Renko chart that I want you to notice. One is this structure marked with horizontal gold lines. Here's another one up here. Here's another one right next to it. Here's one right there, right there, right there. By the way, once again, Asgardian, that wonderful guy that he is, actually wrote the program so that I could mark those as I needed them. Now, I noticed these things forming when I've always traded Renko, or I should say I've traded Renko for 20 years. So I noticed a long time ago these structures forming and what happened to them. And what happens to them is there's a good chance that as you come out of them, you're going to have a run. And I define a run when I backtest it as being at least 3 bricks. So zippers are a place where you can get a trade set up and anticipate that you might get a good run. There's also, I call these closed zippers because they're right next to each other. There's also an open zipper. I don't see one on this panel, but there are open zippers that are spread out a little bit more. Let's see if we can. Here's an open zipper right there. See how that's spread out a little bit more? I've got that marked with purple lines. The other thing I want you to notice about this Renko chart are these dots above the bricks. Here's a double dot, single dot, double dot, etc. The dots mark reversals. The dots mark reversals, and reversals are defined as either occurring on the brick prior to the shift, on the brick of the shift itself, or the brick after the shift. Somewhere on that shoulder of the shift from one direction to the other. If those dots show up there, they're indicating that there's a reversal about to occur or is occurring. So dots don't count much inside of a zipper, so we don't really play with them. So all those are pretty, but they don't mean anything. Okay, here's a dot on the down slope, so that's a good dot. Here's a good double dot. Here's a fake out. Nothing happened with that. Inside zipper, inside zipper. Okay, we actually right now the price action is telling the dots are telling us we may be looking at a reversal coming up. So those are very useful for me to set up trades and to know when to get out of trades. Any questions about those? It's kind of an odd indicator. There's a little story behind this indicator. Greg Freeze, probably messing his name up too, showed interest in this indicator. This is TradeStation, the platform I'm using here, and he uses NinjaTrader. So I thought I would get it rewritten in NinjaTrader and give it to him as a favor. So I went to this website called Ninja, Ninza, and they dealt with this kind of stuff. And so I asked them, see, we're getting a reversal. So I asked them if they would translate from easy language on TradeStation over to NinjaTrader. Well, they hem-hawed around. They wouldn't give me a price. It wouldn't give me how long it would take. They wanted more and more information about it. And they finally came and said, if you don't give us the information we want about this indicator, we're not going to do it for you. So I said, okay, I'll tell you how it's done. So I gave them the information about how it was calculated. Then they came back and said, okay, we'll do it for you, but you have to let us put it on our website. Well, I didn't know a damn thing about their website. So I wanted the indicator for grid fees. So I said, okay, we'll do that. So then they come back about a month later. And what they've done is they've taken what I had, they've fancied it up a bit. They've even made a user manual for the damn indicator. And if you go to their website, you can buy it today for $396. Now, ask me how much of that I got. Yes, I had the rug pulled out from under me on that one. Okay, that's that indicator. Let's go to this panel right here. This is a tick chart. And when I display MES, I use 1,000 tick charts, 1,000 ticks per chart, per bar. So here's our tick chart. There's two indicators on here that are custom indicators. We'll tackle this one first. Now, this is probably the most complex indicator that I've written. It involves the use of something called vector calculus. I'm sure every one of y'all are brushed up on vector calculus, and so we won't talk a lot about it, but let me just tell you in simple terms, what it does. What I do is I treat each candle as a vector. And for those of you who remember physics, will remember that a vector has both a length or a magnitude and a direction. If you remember those XY coordinates that we used to play with in algebra, or if you drew a line from the origin to the point 33, that line could represent a vector. It has a length that you could get from the Pythagorean theorem, and it has a direction, the angle that it makes with the x-axis. So I've treated each one of these candles as if it was a vector. And then I used vector calculus on that and ended up with this indicator. Now, let me blow this up and show you this. This is pretty cool. This indicator looks like a bunch of noise, doesn't it? But it really isn't. Notice that it will reach a peak at a certain level. At the same level all the time, but it'll ascend, reach a peak, and then descend. And it'll reach a bottom at about the same level every time too. That's extremely helpful because when I reach a bottom or a top at that level, I know there's a damn good chance that it's fixing to turn. What you want to wait for is not for the rounded part, but when it makes the dive. So there's the dive. Okay, see that? See how it marked the candle before the reversal? That's where the dive occurred. Now, you would be watching this and you would notice the whole time that it's rounding over that you're fixing to come to a potential reversal. But you wouldn't take the trade until it made that dive. So you would make the trade on that candle, you would go short. Let's look at a bottom. Here's a bottom. So that marked the candle. We went down, then we had a neutral candle, and then we made the reversal and turned up. So that marked a pretty good spot as well. Any questions about that one? I know I've kind of glossed over a lot of stuff, but you're not particularly interested in how to do the calculus of it. Okay, this bottom indicator also involves some calculus. By the way, I named this indicator the vector velocity indicator, VVI. Notice it's not the velocity vector indicator. That's a physics term, velocity vector, very appropriate one. Mine is the vector velocity. So it's looking at the velocity or the rate of change of that vector. That's what the calculus part is. This one I had named, so we'll just call it the slope MA difference. Now, this one is kind of like the MACD in a way. I know a lot of y'all have probably used the MACD. It's sort of like the MACD. The concept is sort of like the MACD in a way. I've taken two moving averages, a 13-period moving average and a 21-period moving average. Those are fib numbers. That's how I came up with them. They're fib numbers, and they're spread apart enough that it becomes useful. And then I've taken that curve generated by the 13-period moving average and the 21-period moving average, and I've taken the first derivative of that curve, which, as you remember, is the slope of that curve. The slope is going to show you changes in that curve before the curve does itself. Does that make sense? The slope's going to show you it's changing before your eyeball is going to pick up that the curve itself is changing. So it's the first derivative. So this is a 13-period moving average first derivative and a 21-period moving average first derivative. And I've taken the difference between the two like you would for a MACD. And I've colored it in such a way that when the curve switches direction, the color changes. So what we're looking for here is we're looking for where it changes. Okay, there it marked that candle. It changed right after that. Let's look here, see what this did. This marked a couple of candles ahead of time. It told us ahead of time we were fixing to get a reversal. Wouldn't enter there. I wouldn't enter there. But once I saw that it was reversing, it would have been a good trade. And then we're getting one now that's showing us both the VVI and the slope indicator is showing us there's a reversal in action. Any questions about that one? Okay, we're doing okay on time. All right, this is the last panel. Got a question? No? Okay. Okay. This is a time chart. It's a 5-minute time chart. It has a 200-period moving average on it and a 50-period moving average on it. I don't use those in my trading. They're just there to show me quickly what the trend is. The rest of this involves an indicator called the ADX. I don't know how many of y'all are familiar with the ADX. It's an unusual indicator, and you don't see many people using it. It takes a while to learn how to use it. It's not a real straightforward indicator at all. ADX stands for Average Directional Indicator. And what it shows you is whether there is a trend present, and if so, how strong the trend is. Doesn't tell you anything about direction of the price. Nothing about direction of the price. It just tells you whether there's a trend there or not. So a rising ADX doesn't mean that the price is going up. It just means that you're developing a trend. Here, see, there was a trend, a downtrend. The ADX rose, showing that there was a trend present. It made a curve right there. And sure enough, that trend was over, and it was starting a different trend. Now, along with the ADX, when you use this indicator, there are two lines that are called the DMIs, Directional Movement Indicator. And those help you with what the direction is going to be. The ADX tells you there's a trend. The DMIs tell you some clues to the direction. They also tell you about the strength of the move. This is an ATR, average true range. You see it cycles. This long flat period here was the overnight. A rising ATR is favorable to your trend, to your trade. A rising ATR is favorable to your trade because the candles are going to be bigger. They're cycling up. You're going to get more bang for the buck out of your trade. So I follow the ATR. The very last one on the bottom here is a DMI oscillator. I won't spend a lot of time on this, but this just takes the DMIs that I've showed you here and plots them around a zero line and shows you how strong or how far away from the zero line they are. So here the DMI plus, or the green one, is far above the DMI minus, or the red one. So we get a high DMI oscillator. Here the red one, the DMI minus, is above the DMI plus, and we get a downward move in the oscillator. The oscillator allows me to look for divergences. And I'm looking right now. I don't see any on this this time frame. I don't see any divergences. I hope y'all understand what I mean by divergence. I wish I could show you one, but divergences with the DMIs is extremely powerful. When you see a divergence happen, you really have to pay attention to it. A divergence is when, let's say that the price action is climbing, but your oscillators are declining. In other words, even though your price action is making high, high, and high, and another high, your oscillators are making, and this is not what this one is, I'm just telling you. Your oscillators are, say, making lower, 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 lower highs. So that's a negative divergence. And it's a clear indicator that there's potential for a reversal in that trend. I find that very powerful. Okay, any other indicator? Okay, I think I've covered all the indicators. Anybody have a microphone or wants to ask any questions about the indicators? We're down about 30 minutes. Do you want to just kind of watch the market and see what kind of trades we might find? Let's do that. I'm predominantly watching the Renko chart, to be honest. I trade mostly off that Renko chart. Let me explain how I trade. I do not have a target price when I enter a trade. I don't really care where it goes, as long as it gives me some profit before I get out. I don't care whether it goes to a certain place or not. Now, I can look at the Renko chart. It's the easiest way to do it. And we can see where there's resistance or support. And so you might say, well, Melegor, why don't you watch support and resistance levels and take your trade to those and then get out? No, that's not how I do it. Here's what I do. I'm entering on a reversal. I'm going to exit when I see another reversal. Does that make sense? The trade's going against me. I'm seeing another reversal. I'm going to get out, which sometimes makes for quick trades. But as they say, green is green. So it doesn't matter to my average time in a trade. I think last time I checked was about 5 minutes. So I'm out of that trade as soon as I see it reversing against me, and sometimes that's right after I enter it. If I enter it and it just goes against me right away, I'm very likely to just get out of the thing. I can always re-enter. If the indicators still look like a reversal's in progress, I can always re-enter if the price action turns back around. But I don't want to lose any more than I have to. Last time I checked, my average tick loss was 9 ticks in a trade. My average gain was 17 ticks in a trade. And my win rate was, I think, around 65, 70%. So you can make money like that. Ask Guardian can testify to that. That's how he makes his money too. Okay, we're getting a nice reversal here. I've been gabbing so late to enter the trade, but it showed up here. This reversed nicely. This reversed nicely. Let's see what's going on over here. Well, nothing. The yellow one's peaking, the red one's moving up, the blue one's moving up, so there's no information there. Our QQE is flattened out, so no real information from that. Let's look at this purple. Oh, I forgot to tell you about the purple line. Okay, the purple line is the first derivative or the slope of that ADX line. We want to know when that ADX and we're gaining a new trend. We want to know when that thing changes directions. If you eyeball it, you will eventually see that it's changed directions. It changed directions right there. But if you look at where the purple line peaked a couple of candles early. It gave us a clue that the ADX was fixing to change directions, that the trend was fixing to be over, and that a new trend was fixing to be established. Does that make sense? That's what that purple line is, first derivative of the ADX. That I added that. And that's why I have usually you see this displayed with the ADX and the DMIs on top of each other. But that's why I have them spread out, because I have this extra line in there. Okay, let's see what else is going. Okay, so we're making a reversal now back up. That's showing us. These are moving up. I don't like it. No trade there for me. When I enter a trade, I have an OSO order to place a 25 tick trailing stop on the trade. Now, if I hit that 25 trailing stop, I'm embarrassed. That means I've somehow gotten distracted. The trade's just gone horribly against me. I've looked away. I'm talking to my wife, or something's going on where I lost attention and it's moved 25 ticks against me before I recognize to get out of the trade. Not good. What that 25 tick trailing stop is there for is an insurance policy. In case there's a sudden move, there's a sudden Trump tweet, or something's gone on where it's moved too fast for me to recognize that the trade's reversing and I need to get out. It's moved too fast for that. That 25 tick trailing stop will save me. Take a loss, but it'll save me. May get some slippage there depending on how fast the market's moving. May get some slippage, but that's okay. I'm out of it. So that's what that's there for. When I enter a trade, I mark it in. When I exit a trade, I mark it out. Two reasons for that. One is it's quicker for me to execute. I can execute a market order much quicker than I can a limit order. The second reason is I never miss a fill. There's nothing more frustrating than to have a perfect setup to put your limit order in and then not get filled and have it romp without you. So I never have that feeling. I never have a feeling of not being filled. I'm obviously going to get some slippage one way or the other by using market orders, but as I say, those two reasons make it worthwhile to me. Okay, I'm getting some messages. Somebody is recording this. Good. I forgot to ask somebody to. You still seeing my screen, everybody, I hope? Okay, what are we doing here in the market? We got some data. Oh, that was oil inventories. So the ISM services data at 9 o'clock caused quite a drop in the market. We were there and we dropped all the way down to here. Was there any clue that that was going to happen? Not from those indicators. See if we can find 9 o'clock on here. Where's 9 o'clock? 9 o'clock's way back over here. See? Here we go. This is going to be 9 o'clock. Yeah, there's 9 o'clock right there. What did we have? Well, we had a nice peak on our VVI. And we had a color change one candle before on the slope indicator. So we may have taken that trade. Would I take a trade a minute before the data's going to come out? Yeah, if it was a good setup, I actually would. May get burned, but on the other hand, if it's a good setup, then I feel like I should take it. Okay, well, I've kept you guys about 40 minutes. Do you have anybody got microphones? Have you got questions? Or I actually, yes, I do want it shared. I do want the recording shared. Somebody asked if it could be recorded, and I forgot to ask somebody to do it. If you have questions, you could write them in the channel, in the trading chat channel. I can see it. Oh, we have a question about Captain. Now, let me add one other thing before I quit. I mentioned that oh, here's a question. ADX DMI instead of RSI. The ADX gives me a different type of information. It tells me about trends. RSI is an oscillator. It's going to tell you whether you're overbought or oversold. And of course, some people think oscillators are useful. Other people think they're not. But ADX I find to be useful. Maybe there may be some people out there that have tried it and don't like it. I almost would have the feeling they didn't give it a shot. You really have to work with it for a while before you understand how it moves with price action. Yeah, that's a good question. All that glitters is gold. That's true. Okay, here's just a final offer. As I say, about 90% of what I do nowadays is swing trading. I usually post my swing trades on the day that I take them if they're not high risk trades. But I would be happy, like we did today, to have a session where I talk about swing trading. So if you want to do that, just post in the trading chat channel if you're interested in that, and we'll get that lined up. Okay, everybody have a good day. Good trading day.
Same to you, Melegor. Appreciate it.
Sure thing, Eddie. Take it easy.
Get in. You too.